Yo, what's good YouTube? So in this video I'm going to be breaking down a whole entire pair, how I look at it, what time frames I'm looking at, and I'm going to go like super into depth on how I do it. So the pair I'm looking at is XAU to USD, also known as gold spot to the US dollar. And first thing you got to do when you come onto the charts is you got to recognize what day of the month you are in and where in the month you are at. So today, while I'm looking at this, it's February 15th and we're in the middle of the month. I use every single time frame from the monthly, the weekly, the daily, the 4 hour, the 1 hour, the 30 minute, the 15 minute, and the 5 minute when I'm taking a trade. Obviously, I'm looking at the monthly and the weekly and the daily only once or twice, and then I'm monitoring the 4 hour, the 1 hour, and the rest of the time frames when I'm taking these trades. So as you can see by looking at my chart, I have a bunch of stuff marked up. This is just kind of my analysis when I'm looking at it. And it's all bunched and jumbled up because we're on the weekly chart. So this is, you know, a lot of data that is like sitting right here. So first thing I do is I go onto the monthly chart. And this is and I'm going to erase everything. So let's remove everything. And I'm just looking, okay, where is the monthly at? You know, previous months, let me move this down. Previous months we've had a big wick up here, which means that liquidity came up to here, but then it closed all the way down here. And you guys have to realize that every different time frame, every candle is, so this candle right here is worth one whole month. There's still 13 days on this candle until it closes. So, you know, for the rest of the month, these next 13 days, we could finish all the way up here, and then the blue candle would be finishing all the way up here. Or we could come all the way back down and there would be a huge wick left, and then it could close like right here. It just depends what's going to happen the next 13 days. So I recognize that, you know, market has kind of stopped previous months around this area. As you can see, there's touches, 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 and touches. This is also called resistance. Resistance is like the ceiling, and support would be like the floor. So down here, we can see there's support right here. If I draw it out, you know, there's a support right here. It kind of moved up. It's like a little staircase that moved up, and there's support right here. Now, these three don't really matter, so I was just giving that as an example. So next thing I do is I see, okay, we're coming into this area that has this wick that's right here, and I go down to the weekly, and I'm trying to see like some more information. So as you can see, now we have resistance right here. And this is where this weekly candle drove into, and now it's coming back down. And you can see that if this does close below here, we didn't close as high as these previous weekly candles way over here. And you can kind of see how, if we pulled a trend line, everything is kind of shifting downwards, and everything right here is kind of shifting upwards. So we're kind of getting into this area where, you know, we're going to see if it's going to go up or if it's going to go down from here in the next coming weeks. Okay, so now we'll go down to the daily. And as you can see, on the daily, actually, we did close above this area. So as you can see right here, we actually did close above this area, but what happened right after that? We wicked into it, and now we're coming down hard. So there's 2 hours and 35 minutes left on this daily candle. And if you look left again, you can see that there was support right here, or I mean resistance right here. So, and how price usually moves as market structure, if you guys know anything about that, you know, we're closing above this, and now we're coming back down. We could be tapping this area. Let's put these on here so you guys get a little better understanding. And then we could be tapping back into this area, and then we may be continuing up, and maybe to this next level right here. If we put this price right here, we could be coming into the 1910 level potentially. You know, that's a big leap from here to here, but it could happen soon. We don't know. So now we go down to the 4 hour, and you know, I'm kind of just looking at how price is moving, how the candles are acting. As you can see, on the 11th, we had a huge move up. And you guys have to keep in mind there's technical analysis, which is these bars that I'm drawing right here, these trend lines, the support and resistance, and then there's also fundamental analysis. So if you guys know anything about the world that's happening right now, there was like some Russia and Ukraine stuff. I don't know a whole ton about it, but I do know that Russia was going to attack Ukraine or something like that, and just this morning the Russian troops pulled away, which means that the risk of war is off and investors are pulling out of gold and back to fiat. Fiat currency would be USD or the country's currency or whatever it is, and that is what made this big drop right here. So yes, there's technical analysis, but there's also fundamental analysis. And when you see these big drops like this, because this is a lot of money moving right here, if you guys caught this move, this is a lot of money that you could have made, like a lot. So you also have to keep in mind there's technical analysis and there's fundamental analysis. You know, I'm thinking a lot right now and I'm trying to explain everything to you guys, so I can only explain so much. So as you can see, let's mark this up right here. This is support down here, and as you can see previously, there was resistance right here. It kind of taps back into this area. So what I'm trying to show you guys by doing this is that there was importance at this level. You know, price continuously bounced on it, moved above it, and then bounced off of it, and then continued up. And then where was our next level? It was right over here. So, you know, let's just say like a potential trade could have been, you get in right here, you realize, okay, it's coming down. You can see to the left that there was already a big wick left. It tried to push down, and then it closed up here as a blue candle. Next thing you could have done is taken a trade from here to here. Had your stops down here. If you wanted a more generous stop, you could have done it right here, and that would have been a 1 to 2 risk to reward, as you can see by this number right here, which means, if you guys don't know what that means, it means you could be risking $1,000. So let's say this trade moved all the way down here, you would lose $1,000, or if it moved all the way up here, you'd be making $2,000. Or if you wanted to have a more tighter of a stop loss, which is probably what most people would have done, is you'd be risking, let's say, $500 to make almost $2,000. So that is a quick example of like a trade that could have been taken. If you were going to hold it, where would you hold it to? You would hold it to this next level up here, which is 1867, and it would even be more of a big trade. So that's just an example. So obviously I don't take trades on the 4 hour. I take trades, you know, on the 15 minute, the 5 minute. I'm usually in and out of trades within less than an hour. So, you know, these traders could be holding this trade for a day or two to be able to catch this move. And, you know, you have to have a lot more patience for that. And that's just not my style of trading. I don't like to be in the market that long. There's more potential of it going against you or waiting too long and then getting too greedy or something like that. So let's go down to the 1 hour now. As you can see, the market moves in higher highs and higher lows, or lower lows and lower highs. So this is obviously an uptrending market right here. And then right here, we could be starting a downtrending market, but we kind of got to wait and see what happens with this next. If it kind of comes up here, forms a resistance, and then continues on down. So I'm going to break down more of this for you guys. So as you can see, we had a resistance right here. It came down to our support, And then what did it do? It actually flew past our resistance. So this would be the higher high. This could be our higher low on the bigger time frames. Obviously inside of these smaller time frames, it has its own structure of higher highs, higher lows, and lower highs. So boom, boom, and then here's our next higher high right here. Our next higher low is this area right here, and this is our next higher high way up here. And then as you can see, what happens next is the market came down and it actually closed below this spot right here. So this could be the start of a new downtrend. As you can see on the 4 hour, we closed below on the 4 hour. So you guys got to recognize that on the 4 hour, we closed below, and on the 1 hour, we closed below. So now we're on the 30-minute, and we're recognizing where everything is happening. I'm gonna go over market structure on the 30-minute time frame. So right here, higher high, higher low, higher high, higher low, higher high, higher low, higher high, and then we start to break all these structures. This minor support right here, this minor support right here, this minor support right here, and it's kind of telling us, okay, maybe we're gonna start going down again. Because what did the 4 hour tell us in the daily? That we've been shooting up for the past 2 days, and now we're starting to see the market come back down a little bit. So you guys are probably wondering, how am I going to get into this market? And for my strategy, I usually take trades that are less than 1 hour. So let me get rid of a few things. Let me get rid of this bubble. Okay, so what I'm looking at when I'm looking at this is I can see that the market is coming down. We kind of stopped right here. I'll put a little line right here, and we made some support. We tried to continue up, but guess what happened? We just continued all the way back down. And as you can see earlier, we have this big yellow bar, and why that is because of previous resistance from before, like right here. So you can clearly tell that the market is turning around on this point because of what happened to the left in the past. Okay, so you guys have to keep this in mind. And so now we'll go down to the 1 hour, and we can see, okay, it came all the way down and it actually closed right here on that same exact line that we were looking at. Now we go down to the 30-minute, and what can we see? At 6 o'clock, like I said, New York session at my time is 7 o'clock. So 6 o'clock, we came all the way down and we closed all the way up here. And now we kind of had a little indecision candle at 6:30, and then we started to continue up, but we couldn't do it. So if we go down to the 15-minute candle, so let's act like all of this from this point over is not here. So I'm going to make this a different color. Let's make it blue. So all of this right here has not happened yet to the right. So now I'm on the 15-minute, and I'm thinking, okay, how am I going to get into this right here? I'm going to go down to the 5-minute, and I can clearly see, like market structure told us earlier, okay, there's a higher high right here. There's a lower low right here, or this would be a lower high. Then there's a lower low, sort of, kind of. Just it didn't close all the way below here, but you kind of get the point. There's a lower low. There's a lower high up here. Gosh, lower low, lower high, and then here's kind of the next lower low, lower high, lower low, lower high up here. And now what do we see? What do we think it's going to happen next? It's most likely going to continue down to here. So let's do a trade right here. You could probably get in right here. you have your stops right there, and you have your targets either right here or right here. So here's your trade that I would have taken on this day. So why did I take this trade? It was following market structure. It came up. We can see that there's exhaustion at this point right here. All these wicks right there. And then we can see a confirmation of this black candle turning, and we get in the middle of this black candle. If you go to the 15-minute, you can clearly see that, you know, price tried to move up, but it couldn't do it, and it continued down. This is also called a price wick right here, and wicks fill, which means price came into this level, so there's still a potential for it to keep coming down. And so, like on the 5-minute, there is support right here, and then that is where our targets are. You can kind of have it a little lenient. Usually it goes down a little bit more, and then that's where you'd be getting out. This is a 1.7 risk to reward ratio, so you'd be risking, let's say, 1,000 to make 1,700, or you're risking 500 to make like 1,200 or 1,300. And you know, if you have a good winning percentage, then you can do this easily. You can have trades that are 1.7 risk to reward, and you know, that's not the best risk to reward, but it is doable. I would have taken that trade. As you can see, then, you know, price wicked again and then started coming back up. What did it do? It broke market structure after this. It closed above this level, and then it came down and then created a new support right here. And it continued up. So you even could have taken a trade right here. You know, I wouldn't have, because it's kind of getting out of the time that I would trade. But this kind of, you know, is all consolidating right here. We're kind of waiting until the next move. It's obviously not in session right now. It's not really New York session anymore. But that is kind of how I break down gold. I start at the weekly. I can see everything. You know, now gold's probably clearly gonna come down a little bit and then may continue to go up if it's gonna come up. But this wick, this big wick right here, is telling me that, you know, price doesn't want to return there for a little bit. Now, if this daily closes with a big wick on the bottom, we could potentially see price continue on going up. When I recorded the original video, this is the spot that we were at right here. I talked about how if we were going to leave a big wick on this daily candle, then we would continue up and possibly go to 1910. As you can see right now, price is at 1894. We're closing in on 1910 right now. So that's exactly what happened. Is we left a bigger wick on the bottom. We kind of tapped off of this previous resistance. Now it turned into support, and then we shot up. So I thought this was interesting, that you guys could see an after of how I was analyzing. As you can see on the 4-hour, all these candles just kept coming up. I hope this video helped you guys a little bit to kind of see what I'm looking for. I kind of mapped out my support and resistance. You know, price forms resistances, forms supports, and then it'll either go touch back on that support or resistance and then continue up or continue down. And that's kind of how price moves. You can see momentum times. You can see where wicks are being left, whether it is going to cover that wick or it is leaving an area because of the wick. And you know, all this may seem very confusing, but as you guys take courses or you guys get into more of the groove of looking at a market nonstop, looking at a market for days, and really getting in tune with everything with the market, then you'll start to understand this stuff. Now keep in mind that gold is a very volatile pair, so it moves a lot in a small amount of time. And so if you're first starting out, I wouldn't trade gold. I would trade, you know, No, not that pair. I would trade USD JPY. You could trade EUR USD. These pairs don't move as quickly. They have their own structure and their own, things about them that you will learn and start to understand. But, I really just I've been focusing on gold lately and how gold is going to move. So that wraps up the video. Hope you guys enjoyed. Leave a like, comment what you guys want to see next.